welcome to our market briefing like every Wednesday. So it's Adria once again. This is your session, as I keep saying. So feel free to ask anything you need. This is your session. This is your time. So feel free to join us and ask for any question, any query you want to ask, either for fundamentals, either for technicals. And I'm here to help, as I keep saying. So, just give me a second to make sure that everyone can hear me loud and clear. Love to share the YouTube link with also my friends in the go-to that they have joined us via go-to-webinar. So we're broadcasting everywhere right now. Okay, so YouTube, Facebook, LinkedIn, Twitter, GoToWebinar. So you can join us from any platform that you wish. Okay, so all the audience have been informed. So before I got any questions and before I jump to the MT4 and MT5, checking and doing the technical analysis with you guys, I would like firstly to brief you up a bit about where we are standing, what's the market conditions right now. Okay, so let's just a second. I'm really sorry for that. Okay, perfect. We are good to go. Okay, as you might already know, it's a bit of a quiet session so far today because the attention and the only important and key release that we are having today is the ADP number. Okay, ADP, you know that especially now that it has been the last few months that it has been revised by the Fed, it is a bit better, is a bit more accurate indicator for NFP nowadays. So that's why once again the attention is on ADP because it gives us a bit of some hints in regards to what we can expect on Friday. Obviously, that's not always the case. Like last time, as you already know, the ADP came a bit in contrast, came a bit in a bit different of the surprise that we got from NFP. Nonetheless, we're gonna see later on the NFP. So we have plenty of time ahead of us to discuss ADP. For the time being, just a bit of a reminder as well that tomorrow is Bank of England. Okay, expectations are for another 50 base points rate hike. So there is a lot of anticipation for Bank of England tomorrow because that will mean that we will nearly be done with all the central banks. We have seen Fed last week, we have seen Bank of Japan, we have seen ECB, RBA, and now Bank of England. Okay, aggressive tightening is expected to be announced tomorrow. Okay, so however, once again, the press conference will be in focus because we haven't seen a substantial improvement in inflation in UK. Okay, so the tone and any kind of signals, any kind of hints that we will get from the press conference tomorrow from Mr. Bali will be key for what we will be expecting by the Bank of England in the following months. August is empty. August is there are no meetings from the central banks will be held in August. So there will be a resumption in September and October. Okay, so as I said, 50 points point rate hike is expected tomorrow by Bank of England. So we might see everything again tomorrow in regards to Bank of England. And also we are expecting them to announce that a follow-up actually of around 25 basic points for the next meeting. And we are expecting, in contrast with other central banks, we are expecting them to confirm that the door is open for further rate tightenings after the summer. Because if we have to categorize everything, Bank of England is the one that it has seen the least impact of the tightening from the inflation and from the data. Okay, so they need to do more. They need to do more. They haven't, and they have been accused actually that they haven't done enough, and they haven't done enough timely. Okay, so inflation is a big problem in UK and remains a big problem in UK. The same stands in Eurozone, but UK has a bigger inflation problem than the Europe. Okay, so and we can see also all this from the data, not only the inflation but also the labor market data, the unemployment, the wage pressures. You can see this comparison between Europe and UK, and the comparison between UK and the rest of the world as well. So housing is also something that at the same time it's a big deal in UK, and actually it might be the main reason why confidence data are in UK present significant concern, even present and signal recession risk in UK. The housing market is struggling significantly. We have seen the sharp rises in rates over the past year. So Bank of England will need to proceed further, to be very careful with their moves in order to find a fine balance act to control all this situation. So I said a lot about UK and Bank of England tomorrow. Let's focus on what's going on today and your questions, okay? So let me share my screen as well. For the team in the GoToWebinar, guys, I send you the YouTube link for you because I think it's easier rather than opening the GoToWebinar. So for the people here in the for the guys in the GoToWebinar team here in the GoToWebinar, I'm sorry that I didn't realize. Team, if you can hear me in the GoToWebinar, guys in the GoToWebinar, can you please join us via YouTube? I have sent you the link in the chat. Let me send it again. Okay. Okay, we are good. Okay, I can see your questions coming, guys. So I will start one by one. It feels good to see a beautiful woman analyzing. I was expecting a male. So, okay, Lumelo, I guess it's the very first time that you join us. So hopefully you enjoy it. I would really appreciate your feedback, okay? Feedback is more than welcome, even if it's bad or good, okay? If during the live analysis, you have a feedback for me, I will really appreciate it. That will just improve me as a professional, okay? Okay, so let's get back. Hello, Budi. What we are analyzing today, anything that you need. Is there is an asset. Usually, how I structure the live analysis is discuss a bit of what's going on right now in the markets, what you should monitor, and then we shift to the platform and we start down analyzing the assets that you want. So, Salo, if you need anything particular, you can say, Andrea, what can you analyze, please? Gold, example, okay? Gold in a 4-hour chart, 1-hour chart, whatever. Ask me anything you want. Or, Andrea, I don't understand. What is ADP? How it could affect the dollar? So this is my job over here right now. My job over here right now is to help you with either the fundamentals, understanding the fundamentals, or the technicals, okay? So what we are analyzing today is basically anything you need. I haven't put on anything yet. This is S&P 500, which for some reason you cannot see. Let me fix a bit. Let me fix a bit. Okay. So this is S&P 500. Is not is sorry, S&P 500. But yes, I haven't started analyzing, guys, yet. Welcome, Kenneth. Welcome, Thabo. Welcome, Patrick. No, you are not a bit lost. No. We just started. Morning, everyone. Morning, Longcha. Not having a sound. Non-dizzy keys. Is it? Can you double check? Is it still the case? Okay, a lot of questions. Bitcoin, dollar. Guys, can anyone, before I start analyzing, can anyone confirm me that the sound is fine? Anyone, just a quick yes or no. Morning, Amiena. Morning, Gutard. Can someone confirm me that everything is okay with the sound? Okay, perfect. So we can finally start. Perfect. Okay, hi. New month's profit blessings. Yes, yeah, new month. And you know that there is a lot of repositioning, and it's August as well. So it's a good month because usually, what I will say now, okay, traditionally, August is not a good, considered to be a month of low volume, low volatility, okay? But I interpret it as a good month because you can sit down, do your own scanning over the markets in the medium and long term, identify trends, okay? So just I'm referring to the medium and long term, just to create some kind of a trading plan for the rest of the year, okay? Because we don't have a lot of data releases during August. Also, bankers are for holidays. Governments and not the governments. The governments are never on holidays, but I mean the parliaments and etc. are also on holidays. So it considers, and people, market participants are on holidays. Month is considered to be a month of low volatility and low volumes. So that's fine. Why not taking a step backwards, scanning the market, check the long term and medium term, and doing some medium term analysis in order to have a clear head for the rest, and clear with clear mind, clear head, create a plan for the rest of the year. I know that most of you might be scalpers, might be intraday traders, day traders, and etc. It doesn't matter. It's good to have the knowledge of existing long-term trends, okay? Because with this way, as a day trader, intraday day trader, scalper, etc., you can decide later on to be to go along with the trend or against the trend for a limited time, and so on and so forth. Okay, so just for something to consider. A good signal provider. I'm not sure whether I can recommend one, but what I can say with their blessing is that we offer for free with some terms and conditions to be met, but no chargeable. You won't be charged for them. Okay, they are for free. But you need to meet some conditions. Everything is online. We offer auto chartist and advanced insights. Okay, so have a look, try them for a few days. If it doesn't help you, you can uninstall it. Anyways, for free, as long as you meet some criteria. But as I said, they are for free. You won't be charged. You just need to meet some criteria. Okay? Everything is on the website, Auto Chartist and Advanced Insights under the education and tools tab. So please visit www.hfm.com and have a look. Okay. Let's start. Gold by Modis Music. Okay, guys, gold. Okay, I will start with my daily chart as usual. Ignore that was a temporary regression channel that I had put on, but very good for mentioning gold, because it's something that I was monitored quite significantly in July, to be honest. So guys, precious metal. I have kept this Fibonacci that I have put back in May and June, because it gives us some average prices for gold. Okay, as you might have noticed in July in July and August so far, the gold has steady between the 23.6 and the 50% Fibonacci level. Okay, this area. Okay, an area that represents, so it's somewhere between 1940, let me be precise, okay, 1936 and 1990, if I'm not mistaken. Let me be precise again, 1985. Okay, 1985. So it has been seen tumbling between these two barriers since the beginning of July, and up to date. So, my dear friends, first of all, you understand that this top and bottom that I have put on is not just the edge of the two of the range of 1 month's range. It's not just the top and the bottom of 2 months range. It also coincides with the 50 and 23.6 Fibonacci level back on the down leg that we have seen since April up to the end of June. Okay, so that's why they are key and strong support and resistance level. And we have seen the gold stack within that area. Okay, so for anyone that is interested in a medium term outlook, what we can say by doing some technical analysis on the gold is that gold is neutral. So what that means, it means that it's moving sideways. It's ranging. It's a ranging market. It's in a ranging market. So it's ranging, and these two levels should be closely monitored, because a breach and break of one of these two, it will be your signal for where your very, very first primary signal of where the asset could hit next, whether it will return down again and retest the 1900s territory in the 200 day moving average, or whether it will continue to the upside and it could potentially return to April's highs. So for some medium-term analysis, please note that right now is neutral, consolidating between those two channels, and these two levels, 1985 and 1936, are key support and resistance levels. Okay, and it's not only that, guys. Also, look at the 20-day moving average, flatten. Bollinger is squeezing, it's turning closer and closer. It hasn't, it's not narrow, but it's turning. It looks like there is the two lines are getting closer. Let me just, okay. You can see also that MACD, it is positive, but a bit, but very, very close to zero and a bit flat as well. Again, something that confirms this consolidation that I talked to you about. RSI is giving some downward trajectory, as you can see, by connecting the highs. Okay, with the asset currently at 50 area, okay, and a bottom and a floor that has been kept for more than a month at 45. Okay, so you can put this line on like I did, because once the RSI break this line, it goes up, or whether it extends lower, it will give you an idea. Also, will give you another signal whether bearish momentum will return, or whether bullish momentum will return, and so on and so forth. So that was the daily analysis. A lot of people are asking about gold. So now we have covered gold in a daily chart. Let's move on, because I know that what you need is intraday analysis, the most of you at least. Give me a second to go down to my 4-hour and even 1-hour chart. Before I go to the 1-hour chart, my dear friends, this is 4-hour chart for gold. The reason why I put that on is because it looks like it's forming some kind of a formation. Not sure yet whether it's a head and shoulder, whether it's a regression channel. So look at that. From the one side, we can see some head and shoulder. Cannot really confirm that, because you see the shoulders are not in a line. There is a neckline though, okay? There is a neckline at 1941. Not really sure, not convinced. But also, if I connect these, the latest swing highs and the latest swing lows, okay? I can, sorry for that, it needs to be, no. Let me check a bit, because there is some kind of, it looks like a downward trajectory since the, oops, what have I done? Yeah. Yeah, look at that. You see that? I don't know how clear is that, but can you see? It looks like a downwards channel. A downwards channel. I know that the chart got a bit messy. Okay, you don't need all these lines that I have. I'm just giving you food for thought, basically. Okay, anything, and if there's anything that helps you, stick to that. If it's too complicated, don't use it. Oops. And the other thing that I would like to drive your attention to, it's also something that we have seen earlier. We have seen in the daily chart, some kind of a highs on RSI. The same stance by connecting the highs in the 4-hour chart as well. So there is some kind of a downwards trajectory. So guys, you can put trend lines on our indicators as well. They are helpful because if the RSI comes up to this trend line, I put this trend line by connecting the latest swing highs. Okay, if the RSI cross my trend line above, that would be a sign of some limited boost of the asset, some short-term bullish momentum. So it's something that it could help you guys, intraday traders, 1 hour traders, 30-minute traders, to potentially join a long position, limited long position of gold. Okay, now is not the time. I'm not saying that. Okay, I want to be clear, but a bullish cross, a move higher for RSI, not only above 50, but also above the trend line that I have put by connecting the highs of RSI, in combination with I don't know, it might be a cross of a move of gold above the 20 period moving average. It might be a move above the midline of my channel. So if there is two bullish indication, is something that it might indicate that gold could extend higher for a limited time. Okay, so. And you can see that it's currently retesting the mid of my channel, but it hasn't confirmed a cross above it. It hasn't closed above it. This candle is still on. It needs to be closed in order to give us an appropriate signal. For the time being, it looks like it's struggling for 4 sessions in a row to move above the 200 period moving average, above the midline of the channel. So right now, nothing is clear. Also, okay, so what I'm telling you here is that a close of this candle above the midline, okay, and obviously the 200 period moving average above it, in combination with a rising RSI, indicates to some limited short-term bullish move for gold. Okay. Yes. So if something like that happens, the next resistance level, it could be seen at the latest swing high that goes up to 1963, or you can use one of your indicators, for example, ATR. So ATR is at 7.32. So multiplied by double, if you have a risk and reward 2 to 1, that means around 14 points higher for gold. Or 7. ATR is at 7, so you can use the ATR as such. Depends on your risk and reward and risk management procedure that you are following. Okay. So 7.32. That should bring gold somewhere at 1959, somewhere here. Okay. Now, my dear friend, this is if and only if we see this candle closing above the midline of the channel and in combination with potentially, I don't know, it might be rising RSI above 50, cross of the 20 exponential moving average as well, and so on and so forth. So now, let's move on to the 1 hour chart. By the way, on the flip side, Support support is on that double fractal over here. I'm not sure whether you can see it, but over here I have two fractals. Okay, so this is a key support area for the asset, coinciding with the bottom of my Bollingers, and this is somewhere. This is actually at 1940 area. 1940. Okay, now there is also, for the time being, this is a negative bias, a bearish channel with MACD also moving lower and lower and lower, providing lower lows. Okay, so overall, the intraday picture is negative for the gold with some limited corrections, as you can see, providing lower swing highs. Hopefully that was clear. Let's now finish with gold with the 1 hour chart, okay? And pretty much the same picture. Let me clear a bit though. I have way too many stuff. Okay, 1 hour chart. As you can see, is struggling to break. Actually, I will put back the regression channel that we had in the. Okay, I put back the regression channel because I want to show you that it's the same situation. It's struggling for the time being right now to extend above it. So it's hovering below the midline of the channel the whole day and hovering around the pivot point. Okay, here we are. MACD is zero, is negative, even though it improved, and it's currently very, very close to neutral zone. RSI is slightly above 50. Okay. Stochastic over here is bullish, but it lacks of slope, so that indicates that there is not there is no more steam to the upside. It looks that this boost, it's limited. It might even run out of steam already. So even the intraday picture for the time being, it looks that sellers are providing a key ceiling for gold for the time being. So let's put some Fibonacci's as well. Yeah, it's a very strong area, guys. 1953 is a very, very strong area. Look at that. It coincides with our mid of the regression channel, coincides with the 38.2 Fibonacci level from this latest swing low that we have seen yesterday, and coincides also with this latest up fractal that we have seen this morning. Very strong resistance level, and the asset is struggling to move above it. We are still 40 minutes away from ADP, and all this barrier, all this lack of direction might be because ahead of the ADP. But in case that it managed to close and extend above it, attention should be turned to 1959, which is the next resistance area, and very close to the 61.8 Fibonacci level. If the asset, however, pulls back below the pivot point, so below 1950, the next level to be watched will be the day's lows at 1945. While a break of 1945 could open the doors to 1940. Okay, let's move on. Everything okay with gold, guys? You're okay with gold? This is gold. It was everything about gold. Yes, I did gold, guys. For everyone that joined earlier, joined later, David, 24, 5 past 2. So yes, you have seen my gold analysis. Perfect. Um, we missed you too, Billy. We missed you too. We missed you too. Welcome back. Hopefully you're safe. You feel okay, and it's nice to have you back. Reshare the YouTube link. But you're here. Kiprono, you are here. Eugene, we're done with gold analysis. If there is anything that you didn't understand, please, let me know. Okay. Akunola, if you have just registered and you have never traded in your life, please open a demo account. Okay, there is an option on my HFM area to open a demo account. Okay, and practice there firstly. Try to open and close positions there, trying to find your setup, trying to understand what's going on. As I understand, you're not familiar with trading, you have never done trading. So please, firstly, before you actually manage to trade in a live account, please go to a demo account first. Keep reading, keep joining our lives, our webinars, read the material that we produce, search as well, practice, okay, until you feel confident enough, until you find your own plan, your own strategy, until you understand what is going on, and until you feel confident to actually place a trade in the live account. Okay, hopefully you heard my humble opinion. Cold Russia war. Okay, good audio. Morning, Mike. Morning. Good audio. Sound is good, clear. Thank you for your feedback, guys. Welcome, Daniel from Nigeria. Euro pound. I'm selling. Okay. Wait a minute. There's a priority, I'm afraid. And priorities on rotten right now with the euro dollar on a 4-hour chart. So let's shift to euro dollar. I think I missed something. What else I wanted to tell you about gold? Yes, okay. The thing that I wanted to mention about gold is also affecting euro dollar. So I can state it out loud today, right now. So this is euro dollar, okay? Euro dollar. I'm not sure how many of you have seen the news today, but we had seen an announcement regarding Fitch ratings, okay? One of the biggest, if not the biggest, rating and credit rating companies, provider. So it's a one of the most famous worldwide credit rating companies, if I can say companies, if considers a companies, is a leading provider of credit ratings, commentary, research for global capital markets, and etc. So earlier today, there was a lot of headlines that that Fitch rating, actually it wasn't only it was an announcement actually by Fitch that it has stripped the US from its top tier sovereign credit grades. What that means? It means that Fitch, it's the very first, okay, I'm 33 years old, it's the very first time that I can see anyone downgrading United States of America. Okay, and actually Fitch, I don't know whether I cannot remember whether I've seen this in the past, but Fitch downgraded with an announcement today US it is all over the news. If you check Fitch, you will find it downgraded the US. Uh, um, Sorry, I lost my. I get downgraded the US from the top tier credit grade, and this is something that caused a lot of concerns, a lot of fear, and that explains the pressure that we have seen, especially in the dollar uh, and the stock markets. In dollar, as you can see, it was a bit of a limited pressure. It was overnight and a gap down in the Asia Open, and for the time being, is at 102. So it wasn't a significant sell-off in dollar. There is a key ceiling at 102, but stocks are the ones that significantly decline overnight and so far today's due to the announcement. So you can see here is Nasdaq. It gapped down and extended lower until 3 hours ago. That is stopped and currently ahead of the ADP. Apparently, the anticipation of ADP it provides some support and reverses some of the losses that we have seen overnight. Dollar, however, is a bit sideways, but it caused a lot of confusion. I will get back to euro dollar right now. So yes, it was responsible for the gap downs that we have seen from the stock market, a bit of a pressure on the dollar. Yeah, so a lot of confusion, a lot of um, yeah, a lot of confusion, a lot of fear. What else I wanted to share with you in regards to that? Uh, it was just to clarify something. This downgrade, it was around the debt ceiling shenanigans. Okay, the debt ceiling shenanigans. So. Um, yeah, the debt dynamics of the United States, of the U.S. government, governance, sorry, and debt dynamics, but most of all on the fact that unless if you are a company, unless if you are a company, please consider that a rating from this kind of houses. It doesn't really affect significantly. It doesn't impact significantly the market, but this is what was responsible for the sell-off that we have seen this morning. Now, what else? What else? What else? What else? By the way, this downgrade came on top of the World Gold Council's latest demand outlook. It was something that was released yesterday in regards to gold demand outlook. And we have seen that the central bank buying slowed in the second quarter, but the demand remained for the gold. The demand for gold remained solid, remained positive. Okay, that's why we have seen, because we covered gold earlier, we have seen also a bit of a support. Nonetheless, let's finally do the euro dollar as my friend requested. So, euro dollar, as usual, starting from the daily, and we had a big sell off of the euro dollar. Of the euro dollar in general in July, as you can see. Okay, this is for euro. Then a big sell-off of euro dollar. Actually, that was mainly due to the stronger dollar. Okay, stronger dollar. Sorry, I'm running out of steam a bit. Yeah, so we have seen euro dollar reverting from 112.70 territory down to the 50-day moving average. This is a daily chart, and the 109 area, and is remains within 109 area for 3 days in a row, 4 days in a row right now. Always consider the differentials between ECB and Fed. Okay, where we are standing in the interest rate in the Fed and the policy, where we're standing in regards to the ECB. The ECB, for the ECB, we have another 25 points expected for the next. Uh, we have seen the latest rate hike to be around 25 points. However, ECB was the one that they didn't committed to add additional tightening steps after the summer. Okay, so there is an uncertainty in regards to September meeting. Everything is wide open. That's why we have seen euro losing against dollar, because in US we have odds presenting that in September Fed will increase once again the interest rate hikes. But for ECB and the euro we have nothing. Everything is wide open, and that one thing that could explain this decline is that the uncertainty in euro and with the certainty in fact in the US. Okay, so the fact that everything is wide open and everything is possible, either a pause or a move higher is possible in ECB, is what they managed to add a significant pressure on euro against dollar. Okay. Yeah, that's the one. So the ECB, if you notice, is no longer following blindly the Fed. The ECB is no longer looking as hawkish as the Fed is. Is no longer looking more hawkish than the Fed. Okay, that's why we have seen this notch down in the euro dollar. Okay, this dip. Now, I would like to measure this dip, and I would like you very carefully, we'll zoom in a bit, just to see that for 5 consecutive days, 50% Fibonacci level, the area actually between 50% Fibonacci level and 20-day moving average, okay, it provided a key support for euro dollar. Okay, euro dollar, a key support, because guys, a daily candle that it will close below that. Okay, it will close below that level, below 109.50. Okay, it will imply to a retest of 109 area or even 108.90 area. So a move down to 61.8 Fibonacci level or the lower Bollinger. If we see a daily candle closing, okay, that's important, closing, not just retesting. Okay, this was a retest. It moved below it but quickly closed above it. That was a retest. It retested it and closed above it. No, if you see a confirmed closure of your daily candles below 50% retracement level, that it will indicate a potential retest of the 61.8% Fibonacci level. And this comes in line with this decline of MACD, this decreasing bullish bias, also at a size below 50, also something that supports a neutral to negative outlook. Okay. Now for our chart, keep everything that I mentioned sticking to your head. This remains our key support level. Okay, key support level, which if it breaks, it will open the door to 109 and 108, 90, 80 territory. So that remains a floor. In the 4-hour chart, my dear friend Roden, you can see that MACD is negative, remains negative, flatten, okay, suggesting some intraday consolidation, but negative. RSI below 50, 50 is here, and pointing lower. I will use my stochastic as well, to be honest. Bearish momentum. So everything is in line with pressure on euro dollar, guys. So keep an eye on this 1, 2, 3, 4, 5 days bottom. And this is the one that I'm referring to. You see, it also coincides with the Bollingers. Bollingers have flattened, suggesting that it might continue humbling sideways, hovering between 109.60 and 110.30. Okay, 1 hour chart. Let's zoom out. Down, down, down. Slight recovery temporarily. Down, 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 down. Again, floor is at 109.61 is the edge of our Bollingers, and the area that I mentioned. Everything, yeah. I'm afraid, Roden, 4 hour, 1 hour, in general, the intraday analysis is negative. RSI keeps point lower. Stochastic, it had another bearish crossover here, and the lines are pointing lower, indicating that there is further steam to the downside. MACD, okay, 0 is neutral. The candles, we have 4 consecutive bearish candles indicating providing lower lows as well. So again, the floor that I mentioned earlier, along with the 109.60, are the next levels to be closely monitored. So euro dollar is done. Let's shift to Bitcoin. Okay, I feel it's stagnant. Stagnant. I will not argue against what you mentioned there. Yeah, you're absolutely right. Stuck for 1, 2, 3, 4, 5, 6, 7, 8 days in a row. Yeah, not 2900s, 29,000. So yeah, it's not so interesting, I would say. Obviously, 1900s, 19,000, or to be more precise, 28,530, which is the latest low that we have, also coinciding with a resistance area back in May, also coinciding with the bottom of the Bollingers, coinciding with the latest swing, latest fractal over here. So this, okay, just to simplify it, all these provide some floor for Bitcoin. So as long as we don't see breaking this floor, or at least retesting it, it's nothing really exciting. You can see MACD is at 0, RSI at 50. It's just calling neutral, 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 consolidation, consolidation, consolidation. So the only thing that you can do, if you're of course referring to the daily chart, is just monitor these areas, and on the flip side, monitor the latent swing over here. The 30,360 is the immediate resistance level. But for the time being, it's all about consolidation. It's a very neutral outlook. Intraday, in the meantime, we have a nice boost higher yesterday with this latest swing high at 29,992. Corrected lower, but found support a 220 period moving average. Let me use my 5 and 9 setup. You see, correction down, found support at 20-day moving average, a bullish cross of the 20-day moving average, 20 period moving average. This is the 1 hour chart Bitcoin. Bullish cross of the 20 period moving average above the 200, but also above the 50 period moving average. So indicating to some to bullish bias. So this support over here, the fact that the asset is above the first resistance of the day, in combination with the support of 20 period moving average, in combination with the bullish crosses of the 20 period moving average and 250 period moving average, in combination with positive MACD, bullish cross of stochastic, and with the lines pointing higher, that suggests some intraday upwards movement with 29,800, the next resistance area of the asset. Okay? Okay. Dollar yen, dollar yen, dollar yen, dollar yen, dollar yen, dollar yen. Nearly recovered the majority of the losses that we have seen in the end of June. Okay, you can see that more than 80%, nearly 80%, nearly 80%. Yen is the one that suffered the most over in 2023. It is the worst performer, is the biggest loser against dollar so far this year. Okay, as you can see, it returned back to 2022 highs, currently above, actually just a breath away of 143 area, and it looks like in a positive momentum. Why is that? MACD turned positive. Okay, the signal line is still negative, but you can see that there is some improvement. Obviously, for confirming that it returned back to gear and in a bullish trend, in an upwards trend, we need to see the signal turning positive and extending higher. RSI also higher, providing higher lows, and also supported above 50. And you can see the candles, guys. Sometimes if you just see only the candles, you can, not sometimes, actually the candles are enough. Look at that. Very strong bullish candle with a close, very close to the high territory, to the highest level. Consecutive bullish candle, breaking the previous swing low. Okay, and so far today it's struggling a bit, but sustains the gains of the month. Okay, so positive bias remains for dollar yen, with obviously the June's highs to be the next area to be monitored. Now 144.90. If you need an immediate resistance area, that should be the edge of the Bollingers, and the 143.97 basically is the 144 round number, 144 level, 144. Now intraday, this is the 4-hour chart. Look at this beauty. Look at this beauty. Up, broken the previous high, sideways, corrected a bit, up another swing higher, turned lower, corrected, but sustained above the 142 level, which is so above all the moving averages, above the latest the resistance that now turns into support. So this looks to be a temporary correction of the uptrend for dollar yen. MACD is well above zero, so bulls are in control. RSI is at 58, so still suggests that bulls are in control. So this swing low, it looks limited. It looks a correction. And if you allow me, I will put an inverse Fibonacci just to monitor just to check, so just to get extra resistance areas. So that means 144.90, 144, 144.90, 145.10. That should be somewhere in the mid, 146.10 and 147. Okay, this is in the medium and long term. 1 hour chart now. Medium term, sorry, not long term. 1 hour chart now. Let's have a look. Swing low, pullback, correction, pullback, sustain though above 142. So intraday, there is a there is a pullback. So in this 1 hour chart, guys, okay, as I can see, everything is at zero, neutral, small body candles anticipating the data. Allow me to put the 30 minutes chart just to have a clear vision. Okay, so steady. In the 30 minutes chart or 1 hour chart, you can see that there is consolidation. Sideways, 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 moving averages flatten. There is a bearish crossing stochastic, negative MACD, so we might see ahead of the data or during the data announcement, is in 10 minutes, a move back to retest the 142.46 level. 142.46. Okay. Keep an eye on 142.50, okay, on the downside, and on 143 on the upside. A breach above it and a close above it will open the doors to all these resistance areas that we discussed earlier. A pullback at 142.50 could open the doors down to around to 142.20 or even 142 level. So in the 30 minutes chart, ahead of the data or any surprise from the data could significantly cause some safe havens for dollar yen, and they could pressure dollar yen lower. Any questions? We've seen gold. Happy new month, Eugene. Euro O's. Very nice, John. Very nice, because he has exited the nearly 2 months range for the first time yesterday. It was in a 2 months range, and it broken it yesterday and extended today above it. So that's a bullish signal for the medium term, even the long term. Well done. That's an indication that this uptrend that started back in July 2022 is resuming. Nice, well spotted. That's an indication that the euro dollar might continue this long-term uptrend. So currently, yesterday, it was a very decisive, strong bullish candle, breaking the 2 months resistant ranging market. Today extended above it, so it returned back to April highs with the next level to closely monitor the 120 and 168 level, the next level to be seen. While these, the exit of the ranging market, the move higher, the break potentially of 168 level in combination with the positive MACD, positive RSI, suggests, guys, that we might see Aussie returning to 2019 high territory. So this is something that you should definitely add on your monitor list. Okay, nice, very well spotted. Nice. Euro pound and Aussie. Euro pound, I'm afraid I need to finish soon. Okay, euro pound steady for 6 days in a row, found the floor at 0.8530 area, and we have seen some kind of a bullish bias since yesterday. Okay, the asset held yesterday's gains, sustained a move above the pivot point. However, there is a lack of direction, I'm afraid, Daniel. RSI is flat, MACD is flat, the body of today's candle is small, so there is consolidation right now, today. But since we're in the daily chart, the fact that it crossed above 20-day moving average give us an indication that we might see the asset returning to July's highs. So you need to monitor how we will close tonight, how the day's candle will close, because if it sustains gains, or even if it bullishly cross and provide another higher high, that would be an indication that it could return some gains, some losses, and if we could breach 0.8640 or even 8660 territory. You need, however, in order to get confirmation, you need to wait and see how the day's candle will close today. Intraday, there is a lot of consolidation. This is the 1 hour chart. You can see that it's stuck between 0.86 and 0.8580 area. So as long as it doesn't exit this range, it's a clear consolidation. So any swing high could mean a pullback at 85.80 area. Any low could indicate a limited return back to the 86.10 area, and so on and so forth. Aussie. Well spotted once again, surge, but it's a clear downtrend. Especially since today it broken the neckline, and doesn't it look to you guys like an it's like an M formation to me. Boom, 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 broken the neckline. So MACD is negative, RSI is 38, and it keeps pointing lower. Massive daily candles, bearish candles, and the outlook is negative with the doors open for a return back to May's bottom. So if I put my Fibonacci extension on this latest swing, You can see that the next support area is down to not 65.20. Bearish outlook for Aussie. Sell-off since the mid of July. Intraday, but have a look on the pattern, on this M pattern. It's a bearish pattern. Intraday, what can I say? You can see that Bollinger extending lower, but this way below zero, negatively configured. RSI below 30. Small body candle sideways, but this looks to be a correction because it was oversold. So a bit of a correction before another attempt to the downside. Guys, I need to call it a date, I'm afraid, because there is a meeting arranged. So I will scan quickly the one-to-one analysis. Can we use this same analysis for currency pairing? Yes, if it helps you, if my setup helps you, feel free. Okay. Netflix. Okay. Savage, please go to our past webinar website. Okay, past webinar website, and start watching in your free time our webinars. Might be indicators we have for RSI, we have for MACD, we have for Bollingers. Start with those, comprehend what they mean, what they present. I use poor price action. That's not bad. Why not? Look at that. I will take a naked chart, candlesticks. If you prefer price action, so naked chart, that's fine. So look at that. I will go with the daily chart. The trend is clear. The fact that it broke the previous support level, how massive the body of these candles are, the fact that we have lower lows is what you need. Indicators is not always the case, right? Okay? Whatever makes sense to you and only you. Guys, I'm afraid I need to call it to cut it short. For you, dear Jessie, that you ask about euro dollar, as soon as I finish, close the session, you can go back, drag and drop with your cursor, find my euro dollar analysis, and feel free to watch it. Okay. For my friend Serge about Swiss yen, very quickly, because I'm afraid I need to go. In regards to Swiss yen, in the daily chart, in the medium term, it has been in an upwards trajectory since the end of in an uptrend since the end of last year, since December 2020, it has been in an uptrend. So first of all, putting a channel or trend lines could help you. First of all, it could help you provide you some barriers, okay? Some barriers. Use your tools, they help. You see, an upwards trend. So first of all, Swiss yes is in an upwards trend, okay? For the time being, is hovering around the mid of the line, okay? So there is a pullback, as you can see, the last today. So there is a pullback, but as long as the asset doesn't come back below 162 level, if we don't see 162 to be broken, the outlook intraday and overall remains positive. Okay, my dear friend, hopefully that helps you. I need to call it a day. I'm really sorry for that, guys. Oh, it was Netflix as well, which I don't have in front of me right now. But it provided as far as I'm aware, it was in the upside the last 2 days. So keep an eye, my dear, who asked about Netflix? It was Vibes. Keep an eye on whether it will fill the gap that was created last week. Okay, keep an eye on that. For the time being, is in the mid of 3 weeks territory. So key is to see the gap to be filled and to extend and return back above 450 level. Thank you. Have a nice day ahead. Take care. Bye bye.